So a $600 pension 10, 15 years ago won't buy much of anything here today.
And why the millennial generation is starting to give up because they can't afford to get a good job or own a house.
8 million Venezuelans voting for this assembly, saying it's actually less than 3.
It is. And people are going to start rioting in the streets.
Was reported to have asked Putin for military support that would help him stay in power.
We will make America safe again. And yes, together, we will make America great again.
And they ignore him. And 8 more years goes by till Bernie himself finally admits to his sons, hey, I've been running a Ponzi scheme.
Does its dominance mean it can use the alliance for its own ends?
Since 1981, bond yields, also known as coupon rates, have just gone down and down and down.
Federal Reserve note will be your biggest financial liability.
All right, we're live, streaming live. It is Wednesday night, the November 11th, a very important day in our history books, and so I'm excited to have a guest join us, and definitely we might get a chance to touch on that a little bit, but as you guys can tell from the subject tonight, we're going to be talking about precious metals, sound money, gold, silver, and how this could be, a great lifeline for a lot of people in a financial sense. So I'm happy to have a returning guest, Mr. Kenneth Ameduri, joining us. But before I dive into him and go to that screen, I want to definitely acknowledge a couple people. Welcome everybody to the chat. Give it a second before we turn the screen over and get your thoughts, Ken, before the night's over with. So we got Spirit, we got Scott, Joe, we got the New York Redneck, we got Professor Curtis, Excalibur. How you guys doing, man? Appreciate you guys tuning in. And so I want to get right to the discussion. So here we have the man himself, Mr. Kenneth Ameduri. How you doing, man?
Hey, Mike. I'm doing very well. Thanks for having me on the show. A lot of important things to talk about. I think a lot of people have forgotten about gold as of lately. Yeah. And I think people need to rethink gold at the moment and value it once again and pay attention to it in this environment because, a lot of the things that we were saying for the longest time now are starting to come to pass. And the window of opportunity to be positioned correctly, I believe, is closing. And so I really want to talk about the importance of precious metals in this environment. Right. Really before it's too late.
Right, I understand. And so I think we first connected maybe about 2 years ago, or give or take. And so of course, you run Crush the Street, and so we're all in the same line of work, which is to educate people and help people understand the importance of just things we didn't learn in school. So back in that time frame, the metals weren't doing too good, and people were excessively heavy in the cryptocurrency area. Excited about that. I think that was definitely during that little bull run we had there. And so it's not going away. It's just, not the primary story of the people's lives today. So gold and silver, there's a lot of movement, a lot of action in that sector there. What are some things you probably come across, or things that people really need to focus on now?
Well, I mean, there's a number of things. You mentioned the crypto space back in 2017. I mean, that was the hype of Bitcoin, hype of the euphoria, the Uber drivers, Lyft drivers, all the stereotypical things that you hear. Everyone was getting in on it. And one thing that I actually said earlier today in another interview I did was I believe right now with gold and silver, we're in a Bitcoin $3,000 moment in September of 2017. And what I mean by that is, what people that were watching Bitcoin go to 3,000, hoping to get in on it, they're looking at 3,000 going, oh, I missed it at 1,500. I missed it at 2,000. But here we are having seen Bitcoin 20,000. And right now we're looking at Bitcoin 10,000. So even though Bitcoin 3,000 seemed expensive at the time, it was destined for a higher price, and a lot of value was still there to be had. And that's what I feel like we're seeing right now with gold and silver. People are hoping to see $1,300 gold again, and maybe $15 silver. And I feel like the psychology of the market will keep people on the sidelines from buying because of the movements that we've seen. And what I want people to understand is that, $1,500 gold is still very cheap compared to, $3,000, $5,000 gold that eventually we're going to see. It's not going to matter that you bought at $1,500. Sure, you can buy more nominally if it's $1,300, But, there is no guarantee. In fact, I don't think we'll ever see $1,300 gold ever again. Yeah. So I believe that window of opportunity is starting to close. The purchasing of precious metals right now is off the hook. I want to say retail demand is up like 400%. So you can look at silver. 1 billion ounces is produced a year. And the SLV bought on an annualized basis 500 million ounces. That's basically half the amount of silver that's produced in a year. And total investment demand is only supposed to be 30%. And the SLV is buying 500 million ounces on an annualized basis. Yeah. And ultimately, this sort of buying is not going to last too long at these ultra low prices. And with everything that's going on with the markets, with everything that's going on with the Fed, with everything that's going on around the world with this race to the bottom in interest rates, the opportunity is now. There's going to be a transfer of wealth that happens from financialized assets into precious metals. And I want to be on the receiving end of that transaction. And I believe those listening to this now, those who've been positioned in precious metals, and those who are going to get into it here in the near future are going to benefit greatly from listening to a program such as this one today.
Yeah, I do agree. And so as I want to welcome everyone who's tuning in. I have Kenneth Ameduri joining us from across the street, and gold and silver is the primary topic for this evening because he's passionate about definitely educating people. So am I, and there's a lot of proof and factual information out there that that should really convince people that this time it is different. So all the other ups and downs were one thing, but now if you just look at the price of metals, and I think it was a total of 73 countries, I heard someone say, they are all experiencing relatively all-time highs or almost near all-time highs with gold especially. And so it's just a matter of time before we return back to that similar status of all-time near high in gold and as well as silver. So, it's one of the things where there's millions of people who are experiencing all-time highs in their currency. Why not the Federal Reserve know one day?
Yeah. Well, and what's not normal in this situation is, these ultra-low interest rates. And, the Fed has been trying to tighten up monetary policy, and especially going into the end of 2018 there, the markets really started to respond to the monetary tightening. And, the markets have been trying to deflate since 2008, and they just injected it with a tremendous amount of QE. Yeah. And they kept stepping it up. And then as soon as they started to back off, we realized how dependent these markets are on artificial money printing. And honestly, I think they will take it to the next level of some sort of helicopter money, whether that's UBI or checks directly to the people. I believe something like this is going to happen, and it's going to be an acceleration of monetary policy to contain this unsustainable situation. And, again, looking at what we saw at the end of last year, now we're getting to a point where we have to reverse course. We got to lower interest rates again. And in many cases, we have negative interest rates. I'm seeing articles right now. You're reading the same things, $18 trillion of negative yielding bonds out there. I think there's like 30 trillion of debt out there that's real negative yields, if you subtract inflation from it. And so, who in their right mind would lend money to receive less money back in the future? Yeah. And the only people that are really doing that are sophisticated investors, betting, gambling, going to Vegas, betting that interest rates will go lower so that their price of the bond will actually go up. That's the type of investing that's going on in the bond market now, and it's all speculation. Yeah. And so that is not normal. It's not normal to lend money and to get less money back in the future. So we're dealing with a completely speculative, totally experimental monetary system, which ultimately is going to implode. And the Federal Reserve has shot their wad, so to speak. They're going to do what they can to contain this situation. But I believe it's going to take a tremendous amount of helicopter money to, again, contain this situation. before it collapses on itself. And again, people don't realize how quickly things can turn. If you look at the stock market right now, things seem quote unquote normal because of earnings per share and all of the buybacks that have happened over the years. But that's because of ultra low interest rates. That's the only way they've been able to contain their earnings per share, is because companies go in and buy their own stock, reducing the number of shares outstanding, and then it lowers the earnings per share, or the higher the earnings per share, and it looks normal. But when you unravel that, it cascades on itself. It builds momentum. People lose jobs. The stock market corrects. That cascades into real estate, construction. And as recessions really continue to play out, it takes a while to flush out. And again, it's hard to see that now because everything looks somewhat normal from, conventional Keynesian, beer goggle lenses.
Yeah,
so
we've had 10 years
we're in
to
a
get used to this.
situation now that things can turn very quickly, and people should be prepared, especially those who are thinking about getting into precious metals. It's going to become a frenzy. It's going to be like that December 2017 Bitcoin era, where we saw Bitcoin go up $1,000 a day, and $5,000-$10,000 in a week, and then people are going to be more excited about $5,000 gold than they are $1,500 gold, because their thinking is for how quickly it's going to go from 2 to 5,000, that it might go from 5,000 to 20,000. They don't know. It's just going to be a greed filled environment. And especially in the mining stocks. I mean, we're going to see some crazy things happen there. And I want to encourage people to not be in that frenzy, but rather be positioned now and be able to sit back a little bit more when this all starts to play out.
Yeah, I do agree. And as always, for those that are just tuning in, I have Kenneth Ameduri for Across the Street joining us. We're going to be talking about gold and silver, as you guys can see. And so just definitely there's a lot of things occurring right now that makes right now the ideal time, because in my personal opinion right now, metals is probably the cheapest it's going to be for some time in the foreseeable future until we iron out this mess or whatever the next decade. One of my things that I talk about often is 2020 through 2030. And I actually did a video today about how I'm extremely concerned about the baby boomers generation, the older generation that have put in 40, 50 years. Now they've been waiting for this moment in their lives to be able to sit back a little bit, dial back on work, or completely check out from work and just, enjoy life and all that stuff like that. And my video earlier, I mentioned that this next decade, I don't think it's going to be as comfortable as they would want it to be. So right now might be the worst time to ever really be looking to retire. And so what are your thoughts about the older generation? And we can't give advice, but we can share our opinions. And the importance of really probably, utilizing some of that disposable income or whatever it might be to really grab a hold of some of the some metal, probably a little bit more than you probably normally would.
So it's interesting you bring that up. I mean, a lot of people look around, they look at the US dollar, they look at, the price of goods and whatnot, and they don't see hyperinflation. But when you think about it from the standpoint of a retiree who might have been able to get 7% pretty easily a number of years ago, comfortably, safe, maybe they could have retired with, $500,000 depending on their lifestyle, maybe $1 million depending on their lifestyle. But now at ultra low interest rates, you bet that lump sum that you need has seen hyperinflation. I mean, to invest in something conventional, quote unquote, risk free. I mean, you need 10, 15, $20 million to retire to live off any sort of interest bearing asset right now. And especially if we go negative, I mean, there is no living off of it. It's just live off of your actual principal, kill the cow. And I hate that idea. I love the idea of being able to save money and drink the milk, right? Don't slaughter the cow, but you drink the milk from the interest that you make from your money. And that's really not what we're seeing right now. And I would totally agree. Right now is a very difficult time. for anyone to retire. And it's very sad because the people that are trying to retire have worked for 30, 40 years of their life. And so the wealth that they have saved up, whether it's, $200,000, $100,000, or $10 million, represents decades of hard work and of labor. And, that money needs to be very much respected. And it's different than somebody who's worked, for a couple years, who saved $10,000, a young millennial who can, replace that in maybe a year or a couple months of working. But we're talking about people who've saved their entire career. I mean, this is extremely important for people to protect what they have. And absolutely, I think precious metals are a great place for people to put some of their wealth in. And if you are a little more aggressive, the mining shares are going to be an area that we see explosive gains here in the very near future. It's extremely leveraged. Just with the $200 move that we've seen in gold from 1,300 to 1,500, we're talking about companies' profits doubling. That's huge. If they have already had a $200 profit margin, let's say their cost basis for their each ounce was $1,100, and they were selling it for $1,300. They had a $200 profit margin, and now it's $1,500. That's a double what they had before, which is a much greater move than what we've seen in gold, going from $1,300 to $1,500. And my goodness, if we see silver go back to $35, $40, it's going to be an absolute fireworks show. And I really do believe that silver is where the leverage gains are going to be. If you didn't want to speculate in the mining shares, silver has some serious upside going forward here. And I'll give you a one little stat I have here. At gold's all-time high in 1980 at $800, the government admitted inflation rate using their calculator on the Minneapolis Fed, gold would be $2,432 in 2018 numbers. That's just going back, to that 1980 $800 level. Silver at $49 will be $149 in 2018. They don't have a full year of inflation data to make it, for September 2019. But that just goes to show you how undervalued the metals are in this environment. I mean, 0.5% is what the precious metals make up in the U.S. portfolios in terms of, what people own for their investments. The average is 2%. And in 1980, it went up as high as 8%. So just getting back to the 2% average, we have explosive upside in precious metals, and I'm really excited about that. I think $1,500 gold was needed to instill some sort of confidence and to remind people that gold is not dead. It is possible for it to go higher, and I think we're starting to wake a lot of people up, and I hope it sits around here for an extended period of time so people do have an opportunity to take action. Because if it starts moving too quickly, too fast, people are going to miss this train and literally watch it go right by them, because, people don't like jumping into a market as it's starting to go up. Nobody likes to do that. So I encourage people to get in now before it's too late.
Yeah, I do agree. So let's actually get to the chat a little bit and see if there's any questions out there. I see a lot of activity. And as always, for those that might just be tuning in, I have Kenneth Ameduri from Crush the Street joining us. And if you have any questions, just you want to throw out there or comments, you can call in 313-462-0027 or in the chat right up here. You can just highlight at Rethinking a Dollar and with a question, and then we can go from there. And so I do see a question from Jesse James. It says, Mr. Ameduri, why was Harry Dent so wrong about the valuation of gold? So I think Harry Dent was calling for like $500 gold, and I think he's changed his tune, I imagine. But what are your thoughts on that particular analysis? Because he's an analyst, so I'm sure he saw something or thought he saw something.
Harry Dent's a smart guy. He has some of the best analysis out there when it comes to baby boomer demographics, spending, peak spending. But I think his whole thesis on deflation is a little bit too extreme. You know, I think there's an overwhelming case for the investment demand for gold. And I don't think we are going to see gold deflate with the rest of the economy to $500 or to $750 like he's been talking about. But, you know, he's had that prediction for a very long period of time. I mean, he's got some predictions about the stock market going to, I think, like 5,000, the Dow Jones. I mean, don't quote me on that exactly, but I know he has it going down really low.
Yeah.
And that may or may not happen either, because, you know, to a certain degree, if we see the dollar collapse, which I see that happening ultimately, the stock market, you know, as a measuring stick, just like gold, will actually go up in terms of dollars. But in the interim, you know, I do see some deflationary forces taking place, but I don't see it taking gold down to $500 or $800.
Yeah.
And that's just my opinion. I don't think we'll see $1,300 gold ever again.
Yeah. And so we will see, but yet, you know, I believe that if there was some way to have for the powers that be to have one big slam of metals in their last little hoorah, I think just the premiums on top of the metals would probably definitely try to make up some of that difference. So even if it went to say 500 an ounce, stands a lot of coin shops and bullion dealers that stand to lose a lot. So the premiums may be 150 or 100 or something crazy. I think I had David Morgan on. He was talking about the chance of it being a 30% premium on silver, especially. So, but we have a question. Let's try to get to this question. Hello, caller. What's your name? Where you calling from? Hello. Hi there. What's your name? Where you calling from?
This is Dave.
How you doing, Dave?
From South Florida.
From South Florida. What's your question or what's your thought for Mr. Ameduri?
Okay, I just want to give you kudos, Mike. I've been following you, and you have really progressed in your evaluation of the economic situation. I appreciate all your information.
Thank you, sir.
And I want to know about confiscation. You don't really talk about it very much. And this, the host, what's his feeling on that confiscation of gold by the government?
Okay, sounds good. Appreciate your question, my friend. Thanks. Mr. Ameduri, what are your thoughts on confiscation? You know, it's a lot of people do throw that out there in concern of somebody coming to get it from the government. What are your thoughts on that?
I think it's something that's possible. I mean, when you go back to what happened in the 30s, you know, gold was $20 an ounce, and they confiscated everyone's gold, and they revalued it at $35. That they stole from the people essentially like $3 billion, just like that. You know, it was kind of a covert action, really not overt. I don't necessarily think that they're going to take people's gold in this situation. Number one, I don't think many people have that much gold. It's only 0.5% of U.S. holdings compared to, you know, what is out there. I think they're really going to attack it from, you know, an inflationary standpoint. Really go in and inject the economy with new money, and it's going to be hard to say exactly how that's going to play out. I know countries like Russia and China, they're encouraging their people, right? You know, Vladimir Putin removed the VAT tax on gold. I mean, so he's essentially encouraging people, incentivizing people to own gold, whereas in the U.S., we don't exactly have that. In Canada, they don't have any gold. And, you know, countries like China and Russia, they're basically getting ready to back their currency, back the ruble, back the yuan with gold because people own it. And, you know, it's a fundamentally sound way for people to have a fundamental wealth. But as far as confiscation goes, you know, things would have to get very extreme. But I'll be upfront with you on that. And my disclaimer is I do hold a lot of my gold personally, and that's, I think, something that people should consider. You know, not necessarily at my house or whatnot. I mean, you know, strategically in places that, you know, and where people can't find it. I mean, that's what I would say without getting too giving anybody too much
information
and advice on how to go about this, because obviously if the government wants you to do something, that might be a real big conflict, right? To not listen to the authorities. So I'm walking a really shaky line here by giving people information on that. So I'll pass it back to you, Mike.
Yeah, and that's fair enough. And this is all opinion-based information. That's all. This is, I say, consider me, basically lying to you until you go prove me otherwise or whatever. So yeah, just a little disclaimer. But it looks like we have another question on the chat. It looks like from Jeff. It says, how much silver do most people have, and do you think people have a little, a lot, none? A little, and not a lot, none. A little or none when it comes to silver?
I think most people don't own silver. I don't know the exact statistics on it. Again, I can go to the 0.5% of people owning precious metals in their portfolio. But silver is where the opportunity is to have that leverage gain, right? Gold going from $1,500 to $1,900 gold. What is that, like 20, 25%, 30%? I don't know what the math is exactly in my head. But silver going back to its all-time high of 49. I mean, we're talking about a triple-digit return just going back to the all-time high. So the opportunity in silver is absolutely huge. Most people don't own it. In fact, the way the market has traded since 2011, most people have gotten really frustrated. I mean, you know people, and I know Andy Hoffman. I mean, he's openly sold his precious metals for crypto.
Yeah.
And there's a lot of people who got in that boat, who were just all in on precious metals, and got frustrated, tired of the manipulation. They got tired of JP Morgan and the crooks there, and they got out of it. And here we are now with this revival in the precious metals market, and I'm afraid a lot of people are going to completely miss it. So not many people own silver. And I hope that, what I'm saying today is encouraging people to own silver. So if you don't own silver, buy it. If you don't own gold, buy some gold too.
Right. And that's the thing. One thing I've been trying to make a good point of mentioning over the last couple of years is that, in rethinking the dollar or beginning to think about the currency in general, gold and silver, we're kind of talking about gold and silver from a investment standpoint. That's kind of what it boils down to as far as the words we're using. But yet, if you look and have the perspective that gold and silver is actual money, and it's the rock or the foundation of whatever it is that whatever you possess, everything above that, in terms of currency, is what you need because it's legal tender. You need to interact in your daily lives with legal tender. And so in that regards there, you use that to speculate, to invest or whatever. But yet at the end of the day, beginning of the day, your foundation of what you possess most of should be weight, because weight is something that is 5,000 plus years old and retains value no matter what happens in those currencies or crypto or whatever. It is what it is. It's a solid constant. Everything above that is what you use to play with, in a sense. So yeah, I don't like mentioning get gold, get silver as like an insurance hedge. No, it's money. You're playing with fiat currencies, and that's your risk right there. So I want to ask you a question, because we talked a little bit about cryptocurrency, and somebody mentioned referring to Andy Hoffman, his preferred crypto coin that he was pumping heavily, and it's done well, by the way. But cryptocurrency, the linkage to gold and silver. There are some projects that I'm aware of that are tokenized gold coins on the blockchain, redeemable, whatever, in gold. What are your thoughts on those? Would those be a good way of, depending on the project, perhaps, to looking into acquiring metals, but yet having a little backage in the form of a coin or token or something between you and your metal?
Yeah, absolutely. I think those are fine. Again, there's a little bit of a barrier between you and your metal. You don't exactly have it as you would, an ounce of gold. But if you can trust the blockchain, which that's the beauty of the blockchain, it's immutable, it's transparent. And if you can have some verifiable evidence that it is backed by the precious metals, yeah, that's definitely something that's very interesting, and definitely better than the U.S. dollar, which has nothing. I mean, how many people have millions of dollars in just this paper that is backed by nothing? But it's one of those things too. If you're trusting it on the blockchain, why can't whoever's the custodian of it, steal it in some sort of collapse scenario? Is your gold safe? Like, hey, the world's on fire. You call up the custodian and you want to demand delivery of it. It might not be your best solution in a shit hit the fan scenario, right?
Right. I
and
agree.
so, that's just something to consider. But, in general, I'm not opposed to it. I think it's a very interesting thing. The blockchain is something that I believe is going to be here to stay for the future. I love Bitcoin, by the way. I am not a Bitcoin hater whatsoever. I think it's destined for $50,000 plus. I think we've talked about that. Yeah. But it's a totally different animal than gold. This is something that's only been around for 10 years. Gold has had 5,000 years to effectively decide what the price is. Bitcoin's been around for 10 years, and we're still trying to get ATMs in different parts of the world, and people are still trying to understand it. Just a small amount of capital moving into that space, which I believe is happening when you have all this managed money, hedge funds start to enter the crypto space to a much larger degree. It's going to push the price higher, and I think there's a lot of excitement that we're still waiting to have in the crypto space. I know you didn't ask about that, but that's just something that's passionate. That's a passion for me.
Yeah, and so definitely, I am a believer in the technology that has been introduced to us. I'm not a fan of the intentions and how it seems to just be presented to us at this particular time as, the fiat currency system is coming to an end. So I'm real suspicious on that, but I'll leave that alone. But the technology is great. Unfortunately, I think, let's just talk about your thoughts on in the next decade, as things unravel, we start to see more of the truth. People start to feel more of the discomfort. We start to probably begin to even ramp up the loss of the reserve currency, depending on what's rolled out there to us. What are your thoughts on what will be positioned next? Do you see gold and silver being implemented back into the system on an international level for trade? You see a basket of whatever. Jim Ricker's got the SDR, and what are some things you probably guess or think about in the future?
Well, I think what it's going to come down to is probably less of a U.S. role in the global financial system, and we're going to see countries trading more in their own currencies. China and Russia, maybe some more bilateral trades, things like that. And that's ultimately what's going to happen. I don't necessarily think gold is going to be, the backing of these currencies directly, but keep something in mind. I mean, you can take, the gold out of money, but you can't take the money out of gold, if you know what I mean. The same way that they removed gold from, the gold standard, they removed it. Gold is now $1,500, right? You can't remove the value that gold has just by saying it's not correlated to the paper dollar anymore, no matter what it is. So regardless if people are, if it's a government thing where, we start to use gold and trade it around or not, I think gold's going to have that value, and people, at the core are going to always use it for wealth storage and ultimately trade, right? I mean, just because I store some wealth in precious metals, ultimately, whenever I want to use it, I sell and I trade. I buy something with it. I buy a house, I buy food, I buy ammo, I do something with that metal, even though I'm not necessarily bartering with it directly, which could happen at some point. Don't get me wrong. I don't necessarily see that happening directly with gold. I don't think countries are going to be going on any sort of standard. Right.
I do agree as well. Now, as we draw towards the end of our chat, I want to definitely open up. Anyone out there have any questions or thoughts, give us a call, 313-462-0027, or in the chat, you can throw a question out there. And so here's a question that I'm going to throw out there, Kenneth. You can answer it if you feel comfortable or you don't. But it's one of the things where, people can say, okay, they're always talking about get gold, get silver, whatever. They talk about that, but what are some, give us some allocation examples of how, it will be recommended. And so you've been in this space educating people for quite some time now. So you've talked to a lot of smart people. So you've, increased your knowledge just through mere association. And so, you're not a financial advisor. This is our opinion. But I want to throw out some scenarios. So if someone's watching right now and they're, single mom, inner city, just barely have enough, they may have $1,000. And you were saying, okay, question was, Kenneth, what do I do? I only have $1,000 to my name. In your opinion, how can I be a part of this movement that you're talking about that's so important with $1,000?
So that's interesting, right? We're not talking about a lump sum that someone saved for 40 years, like we talked earlier, right? Mm-hmm. That's maybe, a couple months of savings or 3-4 months of savings, but not a career of savings. Mm-hmm. Because of that, if you don't have anything, especially in this current environment, I'd say go ahead and buy, as much gold as you can with that amount of money, right? Mm-hmm. And again, if we're talking about, a dollar amount that was, hey, this was 10 years of savings, 5 years of savings. Then you start to talk about allocation a little more, right? Yeah. But in that example, it's not going to hurt to go all in on gold, mm-hmm. especially with gold at 1,500 and it likely moving much higher in the near term. Because honestly, there's not much else out there where you can capture that much value. The stock market right now, at all-time highs, mm-hmm. I don't think it's going to outpace gold here in the short term, yeah. right? I just don't think that's going to happen. So I would say, definitely put that $1,000 in an ounce of gold, or if you're a little more aggressive, and I don't think there's much risk in this at all, go into silver.
That 1,000 wouldn't get an ounce of gold.
Not an ounce
so
of
would
gold,
you
right?
say more silver than gold? You can get you maybe three 20 roll pack of government minted coins. So with 1,000, would you say get silver or get 3 or 4 1/10 gram gold type of situations, or what? Just throw out there.
Well, I'll tell you what I did when I had my first $1,000. Uh-huh. I bought silver. Yeah, and I would tell somebody to do the same exact thing. You're right. Yeah. Silver is the place to be. Yeah. And at the current 80 mm-hmm. something to 1 ratio, just playing that mm-hmm. going forward here and that revaluing, I do believe silver is gonna significantly outpace gold over the next couple of years.
Okay, and then the very last question, I'm gonna throw it out there because say if we have someone watching that's a little older now, and they have, I believe there's going to be a banking situation pretty soon with negative interest rates, and Jamie Dimon recently said they're preparing for negative rates, and so if someone has say $100,000 sitting in a savings account and they knew they were going to take it out, now they're like, man, I'm open to just hearing about ideas and suggestions from people who believe things are occurring. Now, how would a $100,000 mixture look like? Examples.
This has to obviously it's very nuanced, right? Mm-hmm. I don't know what your debt situation looks like. Have you paid off your real estate? Have you
no debt, no nothing. It's $100,000. They're gonna take it out and do something with it. What would you?
I would probably tell them to put 15 to 20% mm-hmm. in precious metals, mm-hmm. Because look, if we do have a reset and something big happens, which I do see coming, even if you had that much money in gold and silver, it's very possible that we see the physical precious metals go up 10x, mm-hmm. maybe more if we see hyperinflation happen, right? Yeah. And 10x on your $100,000 would make that, $15,000, $150,000. That's mm-hmm. the kind of insurance that you have with just even putting a little bit of money in precious metals. Now, the rest, I would consider some real estate with it. Mm-hmm. If you can, even get some loans I'm not opposed to that, but this is deeper questions where we need to start talking about, what cities still have some opportunity, are significantly undervalued. And I like real estate. That's something that I'm very much about. I mean, if we see hyperinflation, that's rents going higher, right? You own a real asset similar to precious metals. And then, there are certain stocks that I would consider holding. I'll tell you one. I don't think Coca-Cola is going anywhere. I know it's not the most healthiest thing in the world, but they're expanding into a bunch of different things: health drinks, vitamin water. All the different type of health drinks to get away from the stigma of high fructose corn syrup. But I think Coca-Cola is going to be around forever. And again, in a hyperinflationary situation, Coke's a global company. They're going to charge more. So I don't think Coke's going to zero in a collapse environment. So again, it's about really stacking the odds in your favor so that you have something left to show at the end of the day when you do have that, decades of wealth that you've saved and you're trying to preserve. So, by having a diversified portfolio and stacking the odds in your favor, you don't have to stress out every single day worrying about what's going to happen out there, because you're going to float. That's exactly what you want to do.
Well, I do agree with that as well. And so people were typing in their thoughts and comments as to if the questions were posed to them. So appreciate the participation in the chat, as well as the person who called in. Missed a call or two, but yet we'll have to have you on another time. But Kenneth, it's been great hanging out with you as always, my friend. Crush the Street. Any last thoughts you want to leave us with? Any information, anything people can go to be a blessing to you and your work, and stay in tune with what's going on?
Appreciate that, Mike. We have a special report that we created for everyone who are looking to, be a little more aggressive in the precious metals area. If you're interested in some more leveraged returns, some more leveraged exposure, we did a report on some mining stocks. And there's not that many out there that are, really good, really quality ones. And we did a special report. We got 4 of them at crushthestreet.com/4W. And it's a must read for people. This is a very exciting time. It's time to strike while the iron is hot. And the window of opportunity to really profit in this environment is going to close. And I want people positioned now before it becomes a frenzy. So I'd highly recommend people to go to that link /4W for that report. And again, Mike, thanks for having me on the show and for everyone's time today.
All right, appreciate you. Okay, so other than that, everybody, it's been great hanging out this evening. If you've found any value whatsoever out of this back and forth and just really were charged up and encouraged to continue to get your weight up, make sure you guys, donate a thumbs up to this video here. And then for those that want, share this information with your family and friends, because this is something that you're not going to hear on Fox, CNN, and all those other channels. They're going to tell you to, buy the dip, buy stocks, and all that stuff they be telling people. So lead them right to the slaughter. But as always, it's been great hanging out. Be blessed, be safe, and I'll see you guys later. Peace.